Holy guacamole, I was not planning on posting a video today. That you guys know that I post on Monday, Wednesday, and Fridays, but I had to talk about what's going on Wish right now. We're gonna talk about everything that has happened, but some news that came out. Today we're going to talk about some articles talking about Wish and the most recent news about the CFO. Hello everyone, welcome back to the channel. If you're new to my channel, please consider subscribing and smashing that like button since it really helps the channel out. Also, join my free Discord group chat, which link for that is down in the description below. So yes, their CFO is leaving the company, but before saying something about it, if it is good or bad, let's read their press release, as it is where we are going to see what happened, as we don't have any more information, and you guys know that I don't like to speculate. So first of all, they posted this press release today where it says that Wish announced that Chief Financial Officer Rajat Bahri has notified the board of directors that he plans to resign from his position effective July 23rd. The company has engaged executive search firm Heydrich and struggles to identify Mr. Bahri's successor, meaning that they don't have a successor yet, which many could think that it is because the CFO is leaving. The CFO leaving was not planned, or just maybe that they have not found the best person for the job yet. Then they said the Chief Accounting Officer Brett Just and Director of FP&A Jennifer Oliver will serve as an interim co-CFOs, reporting directly to Executive Chair Jackie Reeses. Mr. Just and Mrs. Oliver have been with Wish since 2017 and 2018 respectively. Then, on behalf of the board of the directors and the team of Wish, they want to express sincere gratitude to Rajat for his many contributions to the company. During his 4.5 years as our CFO, 4.5 years. So he has been in the company for 4.5 years, meaning that he was not there just for the sake of the IPO, but have been in the company to help with the growth of the company and expansion of the company as well. Then Rajat has been integral in escalating the company globally, leading us throughout the initial public offering, as I said, last year, and driving revenue growth. We wish Rajat well as he embarks on his next career opportunity. It's important to read that, as so what I get from this is that he just got another opportunity from somewhere else. Maybe with better salary, or just more focus on what he wants, or maybe he just felt his job was done in Wish. Then they said that Brett and Jennifer, two qualified senior finance leaders, to lead the finance team until we appoint a permanent successor for the CFO. Brett and Jennifer are the two people that I mentioned before, the Chief Accounting Officer and the Director of FP&A. Then Mr. Rajat Bahri, the CFO, said that it has been exceptionally rewarded to work with Peter, the CEO of the company, then Jackie and the entire team of Wish. We successfully brought a fun and affordable mobile marketplace to millions of underserved, value-conscious users in over 100 countries and grew annual revenue from just over $400 million in 2016 to $2.5 billion in 2020. I am proud of the accomplishments and milestones we have achieved together and look forward to work with leadership team to ensure a seamless transition. So basically, he has been there since 2016, 4.5 years, when the company was delivering only a revenue of $400 million, which is still a lot. But then he got the company, or he was with the company all the way through from $400 million in revenue to $2.5 billion in revenue 4 years later. Then they went public and now he's leaving the company. Then Mr. Bahri has accepted a position with another company. Here it is. Mr. Bahri has accepted a position with another company. His departure is not related to any disagreement with the company over its accounting principles or practices or financial statements disclosure. It's not related to any disagreement. So yes, here it is. He accepted a position with another company, and we can't know which one yet, but he might have his reasons to do this. Obviously, we never like to see a CFO leaving like that from a company that has been having such excellent growth in which he has been a part of. And many would start saying that this is shady, or that the company will fail, or that it was because of a disagreement. But the truth is that, as they said, he got an offer in another company, which there is nothing wrong with that, and there was no disagreement between them. So I don't see this as a red flag right now. Again, right now things could change later, but as of today, I think as a retail investor, it is always difficult to know the real reason, even though they're saying here that he is leaving because of an opportunity. But many would think like, well, if he enjoyed Wish and had a good salary and see potential in the company, then why is he leaving? The truth is that we will never know. Some people prefer to start working for themselves in a smaller company to make it grow. I don't know. There are so many possibilities to this. And as this article says, being recruited for another job opportunity is by far the most common reason a CFO leaves the company. Among Fortune 1000 companies, the recent longest tenured role is CFO role, averaging just over 5 years. No long time. And Mr. Bakri has been in the company for 4.5 years, so it kind of makes sense according to this article. Excellent CFO will always be headhunted and higher salary, and it to sway a CFO into leaving. Now let's talk about the article that have come out this week about Wish and analyze the stock performance. Another article from the Motley Fool, and it's called "Is Context Logic a Meme Stock That Will Grant You Wish?" In this article, once again, they mentioned that the stock is up over 40% in the past month with strong volume, as Wall Street bets that have been talking a lot about Wish, identifying it as a meme stock and high short selling interest, which we have talked about this before. I don't see Wish as a meme stock, even though they are trying to make it seem a meme stock, as I believe Wish has potential, has a nice product and a business model, and also the short selling interest is not that high as people believe. It has actually dropped. As they said, over 7% of the company's shares outstanding are sold short, which is not that high, but it is still something to look at. They explained once again what Wish does and how the fundamentals look and how the pandemic accelerated e-commerce growth. They also explained that the company is, however, taking steps to address the decline in site traffic. On June 14, it announced a 2-year partnership with French open source e-commerce platform PrestaShop, which we already analyzed and talked about that partnership and how it benefited Wish, as PrestaShop has more than 300,000 merchants that will cross-sell their goods to Wish customers. And they do mention that integration with another e-commerce giant is a potential catalyst for the company's return to growth. Still, they believe that their biggest problem is their path to profitability, as they spend a lot of money in marketing, or as they said, which is more than its entire gross profit and accounted for 61% of their revenue, which is completely true. But what they don't say is that the marketing expenses has actually been decreasing. It decreased 7% between 2018 and 2019, while their revenue grew 10%, and even though it grew 16% between 2019 and 2020, their revenue grew 33%. Also, it accounted for 91% of the revenue in 2018, 76% in 2019, and 67% in 2020, and then 60% in Q1 of 2021, which means that they have been improving year over year. So they make it seem like it is awful at 60%, which obviously it's high right now, but don't mention that improvement that they have been having for years. Then we have another article from Seeking Alpha called "Context Logic You Will Wish You Bought at This Cheap Price," in which they mention their logistics as a catalyst. The company offers a logistics service that has reduced its shipping time to 5 days or less for products that qualify for Wish Express. Because of that, shipping-related returns were down 43% in Q1 2021 on a year-over-year basis, and the number of listings has increased 414% in their Wish Express because of this. They also talked about the difference between Wish and Amazon's logistics, as Wish does not own warehouses like Amazon does, but Wish has a network of local stores around the world. And I found this article very interesting as they share a discounted cash flow, which said that their fair value is $23.94 per share, using a discount rate of 6.33%. I would recommend anyone to take a look at their analysis as it is very, very interesting. Now, in summary, I don't think the CFO leaving the company is a bad thing as of right now, since they said that there were no disagreements, and we found out that other job opportunities are the most common reasons for a CFO to leave the company. On the other side, I would recommend any of you to read any of those articles, as you will be able to see the bear and bullish statement around the company. But what I do recommend is to always do your own research, because if you would have only read the monthly full article without checking Wish financial statements, then you would have never noticed that they are improving their expenses. Just saying. That is why I always tell you guys to do your due diligence and don't believe anything that you see online. Not because I don't want to share my research, I try to do my best sharing my research, but you should do your due diligence and find the truth around any company that you invest on. Hope you enjoyed the video. Please smash that like button and subscribe, as I did this video really quick. It is 3:14 p.m. and the news came out at 1:30 or 1:50 p.m. So I did this video really quick, and I would appreciate your subscription and smashing that like button. Thank you, and see you next time.